Okay. All right, good people. We are here with Mrs. Money with secrets to crash and boom markets. We are going to be discussing 4 items of secrets today, and we will see how it plays out. So for the people that are writing notes, we will be talking about the RSI, and then we'll be talking about the gap, and then we'll be talking about the breakouts, how to trade the breakouts, and then lastly we'll talk about the Fibonacci, how to actually use the Fibonacci. If time permits, we'll also look at how to draw trend lines and how to put pending orders, because that's where people usually have glitches of problem. Okay, right, let's quickly start with our Crash 500. I want to make a disclaimer that this is not a Forex class. A Forex class is separate from a strategy class. This is a strategy class. So people will end up now asking questions of Forex nature, questions like, how long do I hold? Where is my TP here? You know, when is the trend going to end? All those issues are issues of Forex charts, which you should do your due diligence in checking out the movement of the market. So what we are going to be doing is just touching on top, mostly focusing on the strategy itself. Okay, right, we have a need to take it to the last price. There we are on the last price, and we are not trading, guys, we are just looking at the strategy. Okay, we switch on to the bigger time frames. To see overall trend, we have to always look at the bigger time frames. I know Crash and Boom is having temptation to always trade from the 1 minute. When people see the 1 minute, they start entering trades. However, the truth of the matter is that the higher time frames, they give you the overall trend. The rule of Forex says trade with the trend, and it still applies with Crash and Boom. Okay, right, let's quickly insert our indicator, oscillator, RSI. I've got it on 7 here. You can use 7, you can use 6. 14 is the normal one, but for what I want to do today, this one is more effective. So this is a strategy. It's not a way to make profits. It's a way to use so that it can assist you to make profits. Strategies fail sometimes. So the point is you should be able to see where the strategy is working. Okay, right, let's quickly go to the levels. The levels is 10 and 90. We are talking about crash here. So when the price is at 90, we sell, and when the price is at 10, we buy. So many people get troubled by additional levels. For instance, if we add level, say level 30 or 35, we add level 30, and then we say buy, edit. Okay, I'm trying to write here. It doesn't allow me to write. But anyway, you add level 30 here, and then you write buy crash, and then you add another level here. You add level 80, level 80, and then you say maybe sell crash. Okay, you can have those levels. It doesn't mean anything. It actually doesn't mean anything. So how you actually label your how I do it, how I label my levels. I will look at, this is 1 hour charts. I trade off from the 5-minute charts. So when I am on the 5-minute charts, I will look at the highest points. For instance, you can see at 90, the crash was sold. So normally there are areas like these ones, which are supports, which are high resistance areas like this one. So even if you go to your RSI, you can find an area where there's more crashes in the area. So those areas, that's where then I would put 60.98 mild sell. You see, this is a high sell and then a mild sell. So there's no magic that people want to copy to the core whatever you have on your charts. It's just that at that time, crash is selling. So if I was trading at this area here, this is where I would put my line. Why I do this is that I know even though the price is here, let me take the crosshair, show you these crashes. You see, it crashed here, it crashed there, it crashed there. So now what is important is that each time it's going to crash, that's a secret as well, I'm sharing with you. Each time you can see this crash is lower than this one. It gets higher, it keeps on getting higher. But on the RSI, it's same level crashes. So that now whenever the price is getting to 73.96 on the RSI, in the charts, there's going to be a crash. So I hope you note that secret number 1. Secret number 2 would be what the crashes are telling us. What the RSI is telling us. There is, I'm trying to find an area where this thing is clear. Yeah, something like this. No, this is not the one. Where there is divergence. I'm trying to look for divergence. Okay, never mind. But the divergence would be something like, say here, this area, this crash and this crash is getting lower on the charts. But when you look at it from the RSI, you find that it's actually getting higher. Okay, that would be the area of divergence. But okay, there's no example with that. Okay, here's divergence. Yeah, very nice. This and this crash, this is lower than this crash, right? So this crash and this crash, if you look at the RSI here, they are forming a W, but the W is going higher. So this is a higher low compared to what you see here. So this would be a signal for you that the price is going to go up. It's a signal for you that the price is going up, okay? I hope you understand that as well. Now, some people were asking me, how do I enter? They saw the other video I made on the RSI M. Okay, we will look at that. You can see it also on the 5-minute charts and also on the 1-minute charts. On the 5-minute charts, my interests would always be these W's, these small W's. You can see the small W here happened, and it's in line with the price action. There is a lower candle, and then there is a smaller crash going, and you can see it's being depicted here. This is where we scalp the buy. When we see this pattern like this, a W, small W like this, then we scalp the buy. And then also in this kind of W that is forming here, I would still scalp a buy. You understand? Because then it means that there's gonna be some buying going. Already there is some 5 minutes of buying that has happened after this W was formed. And immediately now it's changing into a crash as well. So you don't overstay on these small patterns that are forming. You just scalp the buy in between and get ready to sell. Now, how do you sell on these? How do you sell on these crashes? The simplest way to sell is using your trend line. Okay. Trend lines can, because of the double crashes, can also be inconsistent. But it's always up to you what you want to see. So if you put it like that, you could see that there is a crash that is coming now, though it's short and small, but that is where it is. Remember, we are not trading this, so we haven't looked at the bigger time frame to see what's going on. All we are trying to check is the movement of the RSI, what it is telling us. Okay, let's quickly go to the 1 minute. The 1 minute chart has got these W's that I'm talking about, and these M's. Let's look at these W's here. There was a crash and then a smaller crash. That's what people ask, is it still gonna crash? Okay, whenever there's a crash, there's going to be a next movement that tells you that is it still going down or it's not. Okay, normally when you see a crash smaller like this and it crashes below the previous crash, it's a signal for you that the price is still going down. But the smaller the crash, it always tells you the exhaustion and then that there's a scalping buy that is available for you to take. Okay, right, look at these W's here. A W and a small buying time, a W and a small and a big buying time here. Okay, right. I'm just showing you the RSI. I don't want to get into a lot of things. And then let's come to the gap. Okay, right? The gap, what forms the gap? Normally in Forex, a gap is formed because of the shortage of the buyers here. There's more sellers, so the price skips a certain area and then jumps down, okay, because there's more orders for a sale. Remember, the little thing I want to tell you about binary.com is that binary.com is trading OTC markets. So the market is still moved by traders. How is it moved by traders? If binary.com is giving out a signal of a sell, like here, when it's giving out a signal of a sell, so many people, they enter the sell, but some of them, they see that it's selling and they still enter a sell here. So when they enter a sell here, it starts buying and they become in loss, they get into losses, and so on and so on. So it's always a struggle between buyers and sellers. If there are more buyers, then there's more demand, the price is going to go high. If there are more sellers, then the price is going to go down. But the inverse, is the case on an OTC market. On an OTC market, if there's more buyers, then the price is gonna fall, so that the buyers can pay this, the few people here that are, they said it's gonna sell. And so when they see that there are more people selling now, then they start putting out the buying, so that the selling people can pay for the orders of the buyers. So we pay each other on this one. It's not like Jeff Bezos puts a 10 billion order and then move the markets. The markets are moved by the traders that are actually trading at that time. Okay, right, let's come to the gap. The gap, what it does, it tells us two things. It can either be a continuation of the trend, or it can be an exhaustion of the trend. So you just check where the trend, the gap is. Say there was this big buying, and then a gap opened here. Then it's a signal for you that we are going to be selling, because the buying momentum has come to an end. And then here on the middle, like this, when we were selling, and all of a sudden there was a gap here, it's a signal that the sell is coming to an end also, and the buy almost is starting, okay? But then there was continuation. As soon as the price detected the gap again, it started selling again. The reason for that could be that the price here was skipped. So it engages again the orders that are here for a sell. They start to engage the price going down again. So it can be two-way. All I say to the traders is that, and I learned this from Idris, must say that, because he alerted me to that. I really wasn't trading much of the gap. So when you look at your moving average, as soon as the price, this is what we do with Idris, trend, Bollinger Bands. Oh my God. We don't have all the time, unfortunately. Where is the Bollinger Bands? Right, here. Then you say, okay, how? Still, it's not going into my chart. Okay, I don't have a reason why it's doing that. But in any case, when we have Bollinger Bands, the point where the Bollinger Bands are touching the what? The MA, that's the point where we take the sell. We enter the sell. Remember, the sell, you've got to be in it long before it starts happening. Unlike the buy, you can carry on with the buy anytime. But with the sell, you have to be in it to catch it. Okay, right. Don't worry asking and telling. It's fine. You can put it in your own. Please, let's do that. Just put it in your own charts. Put the Bollinger Bands and see what I'm talking about. Then you'll be able to see. You can always learn from the charts by back testing. If you go to the back of the price, you will find repeated patterns, and they'll teach you a lot. So let's use this time to get ahead. I want us to look at the breakouts now. Please, can you switch off our mics? The breakouts. The breakout would be a place where there's impulse moves like this one, and then a reversal, and then an impulse move, and then a break, a consolidation. Like right now, we were in a consolidation. So in a consolidation, you find that price is moving sideways. As price continues to move sideways, it has a tendency to give you a clue of where it's going to break. How you get that clue from Forex. One of the things that you use to get a clue is from this is the breakouts. I mean, this is the consolidation. There would be a fake breakout to the upside. Why they do a fake breakout? So that the people will think it's buying and they enter with buy, only to find it crashing on them and taking them out of profits. So how you normally see where it's going to crash, where it's going to break out, you just have to wait. Even when you're trading crash and boom, waiting is still a virtue. You just wait out your breakouts. Let me push this a bit down. Somebody is making a noise, Mr. Z. Okay. All right. So when we have a breakout, it sort of helps us to actually know where to go. Now here we have a sell. It broke out to the downside. I'm so sad because I can't. Oh, the Bollinger Band has got a funny color. That's why we are not able to see it. Let me see indicator list. It's got a funny color. White. Okay, let's just put blue. Make sure. Okay, that's better. There's our Bollinger Band. And so when there is a breakout, the normal thing for the breakout is that price tends to go on that one side for long. So in this case, we're seeing a retracement. That price wants to go as soon as it touches the 10 EMA, it's going to drop again. Okay, right. For the sake of continuation, I will have to wait for you again here. Refresh the link, and then so that we can finish the other things. Yeah, because we've run out of time. But the breakout is like that. Here is another consolidation. Then we have a breakout here. So we trade this down with confidence because it's coming from a consolidation. You can get consolidations, good consolidations from 15 minutes time frames. Okay, guys, for what it's worth, let's stop there for now and probably